Education Secretary Miguel Cardona says federal student loan borrowers can expect to restart their payments in February. Monthly payments have been paused since March of 2020 because of the pandemic. According to Politico, the Biden administration is considering a few plans to avoid a possible uptick in delinquencies. They include an initial grace period for borrowers who may have missed payments, an income-based repayment program, and even erasing the defaults of some borrowers. To discuss all of this, I want to bring in Mark Kantrowitz. He's a student loan expert and author of How to Appeal for More College Financial Aid. Mark, welcome. Thanks for being with us. So, before we get into what could happen in February, tell us about student loans before the pandemic and what the landscape looks like now for borrowers.
Well, before the pandemic, we had about $1.3 trillion of federal student loans in the direct loan program with about 35 million borrowers. Today, we have 1.35 trillion with 36 million borrowers. Before the pandemic, there was 124 billion in forbearance. Now we have 938 billion in forbearance, and the repayment flipped in the opposite direction. So most borrowers are not paying back their loans during the pandemic. That's going to change in February when repayment restarts.
And as I mentioned earlier, the Biden administration is reportedly considering a few proposals. I want to repeat what those are. They include a grace period for people who may have missed payments, an income-based repayment program, and even erasing defaults for some borrowers. What do you think of these ideas, and what would you recommend the government do?
Well, I think they're good ideas for easing the repayment process. There's a lot of precedent for doing this, like administrative wage garnishment has a 12-month delay after a borrower loses their employment before it restarts. So I think that they certainly have the authority to make these changes. I think they may want to take a close look at borrowers who are in default to maybe have a 6-month delay before aggressive collection activity restarts. And that certainly would ease it for anybody who still doesn't have their job.
And Mark, a few weeks ago, the Biden administration announced it was easing requirements for a student loan debt relief program for public sector workers. Do you think that these sorts of changes can have a big impact?
They will have a big impact because they're going to allow borrowers who had loans in the old federal family education loan program to have payments made on those loans count as well. So it should increase the number of borrowers who have qualified for public service loan forgiveness significantly. Currently, only 3% qualify. About 500,000 borrowers are going to benefit from this. So it has a positive impact on borrowers who are giving back to society by serving public service jobs.
Absolutely. And Mark, what advice do you have for borrowers and folks who are getting nervous about getting back to those payments? How can they prepare for what's coming in February?
Well, first, they should update their contact information with the loan servicer and the U.S. Department of Education, because there'll be at least a half dozen notices of the restart of repayment, what their payment due date will be. They may need to confirm that their bank account information hasn't changed if they were previously signed up for auto pay, where the monthly payment was automatically transferred from their bank account to the loan servicer. They should not assume that it's going to restart. They may have to submit new paperwork. The loan payment should be the same as before the pandemic. Now, if you're in an income-driven repayment plan and your income has decreased, you may want to recertify your income by contacting your loan servicer. You should review your budget to free up money for the student loan payments because you haven't had to do it for almost 2 years. And if you still don't have a job, contact the loan servicer to ask about your options. They can include the economic hardship deferment, the unemployment deferment, general forbearances, and income-driven repayment.
All great advice. Mark Kantrowitz, thank you so much for joining us. We appreciate your insight.
Thank you.